one of the questions that I get the most is, how does one scan for Wyckoff method setups? How does one use scanning techniques to identify accumulation, distribution, reaccumulation, and so on? And I am very happy to tell you today that we are devoting the entire episode to the concept of scanning for Wyckoff method setups. We have two very special guests today. Roman Bogomazov, who you know, a friend of the show, my teaching partner at Golden Gate University, Professor Roman. He is here. And somebody who may be new to you, John Colucci, who is an incredible talent and is on scanning for Wyckoff method setups. And John and Roman later this month are going to be conducting a three-part, 3-week workshop on how to scan for the Wyckoff method setups. And they are here today to talk about how to do scanning. And then also, they will be talking about the workshop that they're going to be doing later in the month. And so with that, welcome to Power Charting. I am Bruce Fraser, your host. Let's get started. I'd like to start by introducing Roman Bogomazov, who is going to introduce our very special guest for today. Roman, thank you for being here. Welcome to the show.
Bruce, thank you so much. And as always, really happy to be here. And something really special that we have today. And on the background, you guys could see our new website, Wyckoff Analytics website. And behind this website is a big community that we've been building for years and years, starting with Hank, Bruce, and myself at Golden Gate University, and now online, where we have the presence here, and also with Bruce's blogs on the stock charts. And the community has produced so many great Wyckoffans in different fields. And one of them today is going to be showing, and we're going to be highlighting his talent, John Colucci. John came to us, to our Wyckoff Nation, as a student, as a reader of Bruce's blogs, as a student of Wyckoff Trading course, and then progressing through the knowledge and through building of the skill. John just was able to get to the level where he's really comfortable with Wyckoff concepts, ideas, and started developing his own ways of understanding the methodology, which led John to scanning. And as we saw, from homeworks that John was bringing to the classes, it kind of became obvious that there is a growing talent on our hands here, and we need to encourage this growth. And by the way, I just want to mention that John is not the only one who kind of like grew from the students into contributors. Check out on the website our other contributors that were students. And it's just wonderful to see, Bruce, how within the community, we have so much talent. And this talent just, steps up, and it's just such a pleasure to introduce these new people that are coming up. And with that, John, it's all yours. Please tell us what could we expect next in your educational venture, and what about this new class that you and I are going to teach?
Well, thank you, Professor Roman, Professor Bruce. High praise, much appreciated. We have a very interesting scan class coming up. Starts on March 19th, goes for 3 sessions. And we are going to cover some of the very critical skills to develop Wyckoff structural scans. Scanning for Wyckoff events and structures is a little different than other types of scanning. We're using more of our concepts an understanding of the interaction of price with support, supply, demand, the laws of Wyckoff, and all of these things provide very interesting opportunities to find actionable entry points for trades long or short. Really a fantastic opportunity to use the resources that StockCharts provides its customers to use very, very intense concepts to scan for Wyckoff setups. With that, I'll show you briefly, if I may, the Scan for Success Part 2 that we have coming up. We're teaching that course together, Professor Roman and I. We've saved a seat for Professor Bruce, and we may call him off the bench to help us with a couple of the more challenging concepts that we're going to deal with. The 19th, 26th of March and April 2nd are our dates. Please reserve them. We've got a very, very dynamic syllabus for this particular course. We're going to review the things that we learned in part 1, and I do want to say the course is structured so that you can benefit from part 1 even if you don't take, or excuse me, you can benefit from part 2 even if you don't take part 1. You'll find it very, very beneficial. If you have some scanning experience in other engines or some of the predefined scans that are in StockCharts, you'll find it a very easy transition to take part 2. Part 1 is available on demand, and certainly I recommend that you do take it, but it's not critical. You can succeed with part 2 by itself. The things that we're going to cover in the course will be looking at critical scanning events. How do we select the events that we use to create our scans? What thinking and syntax do we use? We're going to show you how to troubleshoot some scans. We're going to do a little bit of that today. We'll also look at the context of the market in which we're scanning, and that's one of our main themes for today. We have a very much of a down market, and what does that mean for scanning? We'll introduce longer time frame scanning, so those campaigners out there that like the big cause and the big result, we're going to show you how to find those candidates. And with any luck, we're going to get Professor Bruce's thoughts along with Professor Roman's on that particular issue. We're going to introduce the concept of zones of influence, areas where price interacts with support or resistance, and how do we scan in that uncertain area and yet be effective to find what we're looking for. We're going to go through some of the really fantastic ranking and sorting functions that StockCharts has. Of course, we're going to analyze our scan results, and we're going to also introduce the concept of advanced alerting as a secondary filtering for our watch list. Imagine if you could have StockCharts scan your watch list for certain price attributes that you feel create a good trade opportunity, and it emails you those every day. Those are the things we're going to cover in depth. And with that, I will note for everybody, we've got a number of blogs up on the site. Of course, Professor Bruce's, legendary, and
it's so good that you put that up first.
Absolutely. There's that old saying about the hand. And
yeah.
So well, here we have some more recent blogs that we've produced in the scanning blog. A lot of great contributors, Franz, Alessio, just a tremendous community, all pulling together to help our folks understand and apply the Wyckoff principles.
So do check out John's blogs, because there are a number of scanning lessons and examples of scans that can be done in his blog. So that's incredibly valuable. So with that, show us what you have for today, John. This is exciting. And I want to make sure we get in as much as we can in the time that we have.
Well, we'll get through everything that we can. So Scanning thoughts for a down market. We, of course, do have a down market. We've had some tremendous volatility. And we can ask ourselves, can we use these market conditions to explore some of our Wyckoffian concepts? Effort, result, supply, demand, cause, effect. All of these things are in play at all times. How can we use this understanding, these laws, to help us find trade candidates, or even simply develop our Wyckoff skills? So for example, what would a Wyckoffian say about the relationship of volume and average daily range, or volatility, in a severely declining market? If we thought of stocks that had both declining volume and declining average daily range, would those stocks be more likely to have found a bottom that could serve as support for a structure, or perhaps even an entry point to capture an automatic rally or quick recovery off of a low point? Conversely, what would we expect from a stock that has declining volume but increasing range? These are concepts that we use in Wyckoffian scanning that you may not use in other types of scanning. Not that the other scanning isn't good, it's simply different. Let's take a look at some of the skills that we learned in part 1 of our course, and we'll be covering these in part 2, so you needn't be concerned about having missed part 1, but we'll go over visualizing price action, identifying technical conditions such as accumulation or distribution, and the events that are important to those. What events signal to us that we are in accumulation or distribution? We go over how to map price action, physically draw it out so that you can see and visualize and get right down on a piece of paper what you're looking for. We show how to go back in time using days ago syntax. We look at scan terms as directional or non-directional. Does this scan term presuppose a direction in price? We're going to cover that a little bit in the scans that we've laid out today. We're going to frame scans for price events that occur up and down or left and right. These give us unique structural perspectives on price that allow us to really zero in on price action that we're interested in. We'll look at widening the scope of scans, and of course, the watchwords for Wyckoff Structural Scanning: simplify, simplify, simplify. You do not need complex or lengthy scans to be very effective. And as always, remember, the best scan engine is between your ears and above your shoulders. That's the one we really want to work on, and that's the coursework and the power charting. All of that contributes to our ability to find the price action that we want to see. Let's take a look at our first scan. What if we look for decreasing ATR, average daily range, and declining volume? So stocks that would decline in range, have smaller daily ranges, and declining volume. What would a Wyckoffian think of that type of price action? Here's a very simple scan that would enable us to see what that type of price action would do for us. We're going to define these variables by looking at the average true range and the slope of a line, a 10-period line of volume, and then we'll rank these by their average true range. But we'll use the ascending feature on the ranking, meaning we'll go from smallest to largest. If you don't have the word ascending after your rank by, it goes from largest to smallest. So where does our concept come in of decreasing range? Well, we have a 10-period ATR is greater than its 5-period counterpart. So from the day you run the scan, 5 periods back, that ATR value is smaller than its 10-period big brother. If we want to see slope of a line, we can code that in to say give us the slope of a 10-period exponential moving average of volume that itself is created on a 10-period basis. By asking that it be less than 0, the slope being less than 0 means the line will point down. Let's go ahead and see what this scan would return for us. We get a whopping 2 stocks.
I do really appreciate how elegantly straightforward and simple that scan is, but also it points out that the volatility, using average true range to be able to tell the volatility and diminishing volatility, which is a measure of exhaustion of supply, absorption of stock, etc., is a classic Wyckoff concept, and how you're using that to reflect a classic Wyckoff idea. And so this I think is very exciting. It's very powerful.
Absolutely. Thank you, Professor. Here we have our 2 candidates. We see that our ATR 5 column is our last column. That's our sort column. It's going from the smallest to the largest because we asked for an ascending sort. That's the response that we get. We have 2 entries. This is our code in the form that it was actually run. And let's take a look at what these have produced for us in terms of chart action. Here is a Biomed, very well-known stock. We see that it's in a downtrend. This is our ATR comparison. So we see our 5-period ATR is indeed smaller than our 10-period ATR. And we see that this red line is our 10-period exponential moving average of volume, and we can see that that itself is descending. This chart would not on its face appear to be presenting a trade opportunity, but our main question and our first question after we run a scan is, are we receiving results that produce that are germane to our request? Are we getting what we asked for? Secondarily, we ask for what the chart is telling us about this particular stock and its viability for a trade. Here we definitely see somewhat of a troubled price move in a down channel. We've broken longer term support. Our relative strength is weak. The MACD is below 0. And our on-balance volume is trailing off. So not a ton of positive things, may not be ready for an entry yet. And it probably is not a great short candidate either, because it is near the bottom of its channel, its down channel. Let's take a look at our second candidate, which is Under Armour, another big stock. Again, we see our 5-period ATR is less than our 10-period, very, very close, and our volume is moving down, although the recent trend, maybe a 5-day volume, would be increasing. The 10-period is decreasing. We see that this stock appears to have fallen out of a range in what is theoretically a significant sign of weakness. It's gone from 22 to 13.5 in a matter of 3 weeks. Great short, but if you wanted to go long Under Armour, I think you might have suffered some damage. So this particular scan has not produced much in the way of trading candidates for us, but we need to remember the first time we run a scan or we process a scan through our mind, that's not where we stop. Now we take a look at what the opportunities are to work with these concepts and produce more interesting results. For example, what if we scanned for stocks that have greater recent ATRs but have lower average volume and the market is declining? Note that when we scan for ATR and volume, we are not presupposing a direction in price. Price can escalate or go higher on each of those conditions. Similarly, price could go lower on those conditions. The directional feature in this scan is the market itself. All scanning is contextual. It occurs within the market. If all stocks are going down, chances are you're not going to find too many that are going up. And in this particular case, let's check with Professor Bruce to see what he thinks we should achieve in terms of results for stocks that have greater ATRs in recent past, but lower average volume.
Well, I think that what is possible with a scan like this is that if you have a increasing volatility against a declining market, it could be a sign of a stock or stocks that are beginning to show the ability to have say an automatic rally or new volatility in the opposite direction, potentially from the market. And so let's have a look and see what we might have here.
So here is our, oops, we jumped ahead a little bit. Here is our syntax for that particular scan. And what we've done is we've modified a single element in the scan. You've got the annotations from the prior scan, but note this term has changed, and that is the only change. That's one of the important points of scanning, is that incredibly and seemingly minor modifications for the scan code can produce dramatically different results. This is very, very important for troubleshooting scans, exploring different concepts, all very, very critical. Let's take a look at what this scan would do for us in terms of results. Here we have 8 scan return stocks. We again have our ATR going from the lowest to the highest. We have, these are the stocks, these are the sectors and industries. One of the important things, simply observe the scan results to see what's returning. Here, the majority of stocks are from the technology area. We also have quite a few from defensive sectors, food products and utilities, mobile telecom. So those are traditional defensive sectors. And we have seen in the market of late almost a little split personality, with utilities and bond proxies increasing at the same time technology risk on stocks would be increasing. Very, very interesting circumstances. Let's see what these particular stocks look like on their charts. Here we have Norton LifeLock. It's done a fairly significant job of increasing in value for folks over the last quarter or two. And we look at whether or not our scan code has returned results that meet the criteria. Well, here our 5-period ATR is now larger than our 10-period, so recent volatility is up. We do see that that's reflected in the lines. Certainly one point of scanning best practices, go ahead and calibrate your charts to display the results of your scans with the scan terms that you used as much as possible. So here we used ATR and we used the 10-period EMA of volume. Both appear on the chart, making it much, much easier to determine if you receive what you asked for. So we see that volume is consistently decreasing over time, and we have what may be the start of a snapback structure right here.
So we go from low volatility to high volatility and a reversal, and you can really see that in the both in the ATR indicator and then also in price. That's really powerful.
Absolutely. Let's take a look at our next chart.
And we have about 4 minutes left, so.
Absolutely. We'll get it in.
Yeah, you're doing great.
Kraft Heinz, deeply troubled stock over the last year or two, has certainly fallen out of a structure here, but we do see that its short-term ATR is larger than its 10-period counterpart. Volume is decreasing over a 10-period line, but a little bit more ambiguous. And relative strength is quite weak and downtrending. It's picked up a little bit of late, but still below its moving average. And nonetheless, we see something that resembles a hammer, wide bar to the upside on good volume, and an attempt to go down on a, I believe this was a particularly bad market day, is muted. So again, we may be receiving not only the results that we asked for, but results that are consistent with the way Wyckoffians think about price, volume, and the relationship of the two.
And what we're really looking for with good scans is to have a list generated of stocks that we can then go in and evaluate with our Wyckoff method skills and be able to identify the best of breed in the scanning list that we have. So we're looking for quality lists that we can
Right. And we have what I believe is a personal favorite of Professor Bruce. We've talked about this stock before, and it's been in a number of power charting blogs. Professor, what do you see here?
Well, here's a great stock that appears to have resolved itself out of an accumulation type structure. It's now in a phase D, phase E uptrend and has had good jumps, increasing volatility, and now is consolidating in advance and appears to be in a reaccumulation type structure, preparing hopefully for another uptrend.
Fantastic. And again, the main point is, yes, StockCharts has a wonderful, wonderful selection of scan criteria and the ability to process some very sophisticated scans with minimal coding. But the most important scan engine is the one that you bring to the table, your own mind and understanding of Wyckoff. So looking forward to working with folks in the upcoming special. Is going to be very, very dynamic. My hope is really to contribute to people's ability to find opportunity through scanning and understanding of the Wyckoff method.
And you can really see where scanning for Wyckoff is different from other scanning concepts. It's just a different approach, different way that we capture and use the change of information through the course of a chart maturing into say a new uptrend from accumulation or distribution, etc. And so we have about 30 seconds left. Ramon, any last thoughts before we're done?
Sure. And as I was looking at the last two charts that were shown, I think it's very important for the viewers on those charts to see the context of the specific scan and what is the context. In one chart it was to the upside, and another it was to the downside. So it's extremely important to understand that as well.
John and Ramon, thank you so much for being on the program. We really look forward to your workshop and for you to come back again and continue to discuss these very powerful concepts. Thank you both.